Welcome to another market video. Today is September 2nd, 2024. This video, we're going to take a look at the market objectively using the market generated information and see what the market is trying to tell us. Now, looking at this S&P 500, we see that the index actually closed up the month of August with a small gain of 2.28% or 126 points. Now, during the month, we actually saw the index drop over 400 points or 7.3%. So that's a nice recovery after that big dip. And looking at this table here, we see that New York Stock Exchange Composite was the strongest performer for the month of August with a gain of 3.11%, while the S&P 500 gained 2.28%, and the Dow Jones Industrial at third place at 1.76%. The tech-heavy Nasdaq 100 only gained 1.1%, but still a gain nevertheless. But the composite only gained 0.65%. That's the Nasdaq composite, with the Dow Jones Transportation losing 0.25%, and the Russell 2000 lost a little bit over 1.5%. Now, looking at the year-to-date, we still see a lot of the indexes with a double-digit gain. And the transportation is the weakest. It only gained 0.91%, while the Russell 2000 gained almost 10% at 9.4%. Looking at the weekly chart of the S&P 500, we see that the S&P 500 ended the week with a small gain, just slightly under 0.25%, or a little bit over 13 points. And for the week, we saw the New York Stock Exchange Composite and the Dow Jones Industrial were the strongest performer, and the Nasdaq was the weakest performer, with the S&P 500 and the Russell 2000 is pretty much neutral. Even the Dow Jones Transportation gained almost 0.5% for the week. And during the week, we continue to see the Dow Jones Industrial making new all-time high, along with the New York Stock Exchange Composite. And for the S&P 500, it is a little bit over 21 points from its all-time high of 0.38%. And for the Nasdaq 100, it is still quite away from it. It's over 5% away from its all-time high, and a little bit over 1,100 points from its all-time high. So definitely, we're not going to be waiting for the Nasdaq 100 to come up, catch up with the other major indexes and come up to this all-time high. Instead, we're going to be watching for the S&P 500 to make a new all-time high. Now, let's take a look at the sentiment and see how are the market participants feeling these days. Looking at the VIX, they are definitely not fearful. The VIX is down at the 15 level, so the market participants are feeling a little bit more complacent. And also, the put-call ratio is below this 0.75, so definitely the market participants are putting back on some risk, and they are not being bearish right now. And looking at the internal for the New York Stock Exchange, we notice the up-down volume ratio is pretty much neutral, right? There is no strong selling or strong buying throughout the week, and we can see that it's kind of consolidating pretty much flat in this consolidation range on the S&P 500. And we also notice that the daily advance decline didn't show any broad market advance or broad market decline during the week. And looking at the New York Stock Exchange 52-week high versus 52-week low, we are seeing a continue a little bit expansion on the number of stocks making new 52-week high versus the number of stocks making new 52-week low. The number of stocks making new 52-week high still outnumber the number of stocks making new 52-week low. Last Friday, we saw 271 stocks make new 52-week high versus only 24 stocks make new 52-week low. And looking at the cumulative AD line from the New York Stock Exchange, we see that the cumulative AD line continue to push higher and making new high, while the S&P 500 is still close below its all-time closing high. So with this positive divergence, the expectation is to see the S&P 500 to come up and take out this closing high to correct this or to resolve this positive divergence. So that is one sign that the market is telling us to expect the S&P 500 to make a new all-time closing high. And looking at the internal for the Nasdaq market, we notice that the Nasdaq is also pretty much neutral for throughout the week, except on Wednesday. We have strong selling pressure on Wednesday, Likewise, for the market participation, there were broad market participation on the downside on Wednesday, and you can see that the Nasdaq 100 lost ground a little bit from last week, and it is pulling back a little bit. So right now, it's trying to stabilize here near this 19,500 area. And on the new 52-week high versus 52-week low in the Nasdaq market, we are still seeing more new 52-week high than 52-week low, although it's not expanding as much as we like to see it. And that is indicative of the softness in the Nasdaq market right now. So although the number of stock making new 52-week high still outnumber the stock making new 52-week low by a small margin. On Friday, it was 78 more 52-week high than 52-week low. And for the cumulative AD line in the Nasdaq market versus the Nasdaq 100, notice we are still looking for a resolution of this particular positive divergence here. So the expectation is that we could see the Nasdaq 100 come up and take out this closing high. So from the sentiment point of view, the market participants are clearly complacent and not fearful, and also they are getting a little bit bullish and putting risk back on. As far as what the market is telling us is to look for a new high from the SP 500, purely based on this advanced decline line from the New York Stock Exchange, continue to make higher high or all-time high. And here are the chart of all the major market indexes. Notice that the Dow Jones Industrial and the New York Stock Exchange Composite, they both closed with a new all-time closing high on Friday, while the transportation is starting to come up toward this all-time closing high here. Nasdaq 100, like I said, we are all a little bit distant away, but it is not declining. It is kind of flattened out here, so it could be consolidating and trying to make a move. But will it catch up to the S&P 500? That will remain to be seen. Right now, the S&P 500 is relatively close to its all-time closing high, and also the Russell 2000 is coming up to try to catch up to its 52-week high. Now, before we go and take a look at more chart, let's kind of look at this particular chart here and see where the U.S. economy is at relatively to these different phase of the economic cycle. To me, it seems to be in between this late-end recession, early recession type of a point right now in terms of the economic cycle. We are seeing, a little bit restricted monetary policy, and we are expecting a little bit loosening or a little bit of stimulus based on the expectation of the rate cut this month from the Fed. And also, we are seeing a little bit of a contraction from the economic activity, and we likely will see more of a contraction as time goes by. And we all start seeing the unemployment rate to start increasing, although it's not increasing dramatically yet. And also the other thing is we haven't started to see disappointed earning from company earning report. So we might start seeing that in the coming quarter, right? In this quarter here, that the next earning report, we might see that. So that's why I put it somewhere around this, late cycle, early recession period in the economic cycle for the U.S. economy. And now let's take a look at these various sectors, the 11th sector in the S&P 500 with the aid of this market cycle chart here. And we notice that during the last couple months since July here, we see the technology has been kind of weak, and also the consumer discretionary. We see that they both are making a lower high here. Now, if it doesn't come up and put in a new all-time high and dip below this low here, then we'd be looking at these two sectors making a lower low, and that will basically establish the beginning of a downtrend. So we here see this technology and discretionary that is starting to weakening, and we know that the market is already close to the top with these two sectors being weakening. The communication seems to be holding up relatively well here, although it did not come up to make an all-time high, but it's getting close to it, and it is, it's holding up and with a higher low. So if it come up and make a new high, then it will basically making a new higher high, and that will continue to be in this uptrend here. Now, the other sector that we're looking at is the material. We see the material came up and put in a higher high, so that show that the material is still relatively strong. So likewise for the industrial, so the industrial is also putting a new higher high, and so we see these two sectors is still strong. Now the energy is a little bit weak. It's in pull back a bit, so we are not seeing the energy, showing some strength. So now let's see the sector that are showing some strength. We're seeing that near the top of the recovery based on this chart here, or the early recession phase, and where the market is near the top, we see the consumer stable, healthcare, utility, financial, and real estate is showing strength. And this is basically what we are looking at right now. We see the consumer stable. You see this trending up, and it's hitting higher high here. And also the healthcare sector is also making high. Likewise, the utility, you see this trending up, and also the real estate sector along with the financial, and this is the S&P 500. So you can see all these sectors that are showing some strength is normally show up during the early recessionary cycle. Right? So basically that's what we are looking at right now. Again, we are not talking about a full-blown recession yet, but it certainly seems like the US economy is slowly moving into a recessionary period. Now let's take a look at the future, the S&P 500 future, the ES, the E-mini S&P 500, before we take a look at the ETF, the SPY, and also the QQQ. Looking at this volume profile only chart for the ES, you see that it is balancing in this balance area right now. So we're basically looking for this thing to break out and fill this gap and come up and take out the all-time high. Now, if it does dip back below this balance area, then we'd be looking at this balance area again to get revisited and get this gap filled down here near the 5,500 area. But right now, based on the market internals and also the market sentiment, we're basically looking for this gap to get filled along with the all-time high to get taken out. And looking at this market profile chart for the ES, we see that it is hovering around this balance area here. And right now, we're looking for this thing to break above this 56.65 and come up to this all-time high at 57.2125. Now, there is a negative point of control here at 57.02. So there is also a little bit of a single print from last Friday, and we could see it dip down and fill this single print area before it make a push up to the all-time high. Now, if it come down, right, if it come down and resolve some of these unfinished business before it push to all-time high, then look for this gap here and also a little bit down here at these poor low here, this poor low to get resolved before we get pushed back up. So basically looking at this area as a little bit of a support area down here at the 5,400 level if it come back down. But I do anticipate based on the market information that has been telling us based on the internal and also the sentiment, we are looking at the possibility for this thing to move up before it come back down. Now, how high would this go? We're going to take a look at that on the candlestick chart. Now let's take a look at the ES candlestick chart here. This is a daily chart. I got it set at 24 hours. We see this gap here. First of all, last week it closed within the weekly range, and it's basically chopped around inside of this balance area here. And if I set this here, you can see that we see that there is this balancing right here. And right now we are seeing the price is still fluctuating back and forth within this two zone here. This, basically the value area high, value area low of this balance area. So for the coming week, we're basically looking at the market pricing these ranges. For the top of the range for the weekly expected move, the market is pricing in above the all-time high, and it will be between 57.3250 and 57.2650. For the low range, is basically pricing into this low volume zone or this volume den for possible support here, or the lower edge of this balance area, and it is between 55.8650 and 55.60. So that is basically the range that it is pricing in for the coming week. So what we will be watching for the coming week is basically for this balance area breakout, either on the downside or on the upside. Now, based on what we saw so far, based on the sentiment and the market internal, the expectation is for the ES to come up and fill this gap and take out this all-time high. Now, what I did is I also put in a 2x extension up here, and that places somewhere around 5,800. And also, the other thing is the monthly expected move, the monthly range for the ES. The market is pricing in somewhere around 5,800 level. So for the month of September, it is not inconceivable to see that the ES possibly make its way toward this 5,800 level or the 2x extension of this balance area breakout. So for next week, the expectation on the upside is to come up and fill this gap and take out this all-time high and move up to this upper range of the balance area. And for the downside, it's basically come down and break through this balance area, move to this lower range, and possibly make its way down toward the gap fill here into this 5,500 area. Now let's take a look at the SPY and see what happened last week. You see that SPY also confined within this balancing area here, and it also closed in the middle of the weekly range. So it actually dipped down and got close to the lower range, but the upper range was never tested or was in play here. And for the coming week, the market is pricing in an all-time high, way above the all-time high. The upper range is between 571.50 and 570.80. And the lower range is down here near the support area of the lower edge of this balance area between 556.50 and 554. So for the coming week, we'd basically be looking for the possibility of the SP 500 ETF, the SPY, come up and tag this 1x extension of this balance area here at 568.60. And if it's come down on the downside, we are looking to see, would it be able to find support once again at the lower edge of this balance area and then pushes back up. But if it doesn't and it dipped below, then we'd be looking at this area here. We see that there is this high volume concentration in this price range here. So we'll be looking at this 548 area between 556 and 548. So this is the next balance area that we be watching out for. If the price dip below this balance area, essentially go dip below this 557.33. Now, if we look at what the market is pricing in for the month of September here, we see that the market is pricing in the 578.50 and 580. So that is a little bit in line with the ES as well. Remember the ES, the market is pricing in the 5,800 area. So we'll be watching for that. Now for the lower end, we're basically looking at this balance area here, this high volume zone here between 548 or 549, essentially 550 and 540. And that's the area that the market is pricing in for the lower range. And that's basically coming down to fill this gap and possibly find support here at this low volume zone here. So for the coming week, we'll be watching for the price to come up, take out the all-time high and possibly come up to the upper range between 571 and 570. Now, if it dips below this balance area, then we look for this lower range to get tested at 556.50 and 554, then move into this balance area here between the 556 and 548 area. to see would it be able to hold. Otherwise, we'd be looking at this gap fill here. Now look at the NQ. We see the NQ is down here at this high volume area last week and spent most of the time balancing between this 19,400 and 19,700 area in this low volume node, and also down here near this little bit of a low volume or volume dent. So right now we're basically looking at the possibility to see what NQ come back up and take out, come up to this HVN near the 20,000 level and see what it be able to break through it and work its way back up to this upper edge of this balance area here near 20,281 and see what it possibly come up and fill this gap. Now, if it's on the downside and continue to come down, we'd be looking for this gap fill here and looking at this high volume node here somewhere around this 19,000 level and see would it be able to find some support and push it back up. And if it doesn't and it continue to slide down, then we'd be looking at the possibility of coming down to this 18,300 area near this high volume node here, or basically this volume edge. Now let's take a look at the QQQ, the ETF for the NASDAQ 100. You can see last week it finished just above the lower range of the weekly expected move, and it is still inside of this balance area here, and it's still below this trend line, this descending trend line. So for the coming week, the market is pricing in for the QQQ to come up and possibly test this pivot high here. And the upper range is between 486.50 and 485. And the lower range is basically this gap fill here between 467.5 to 464.5. So we'll be looking to see would it be able to come up, take out this high volume node and push up to this, with the upper range and possibly test this high here. If it's unable to get above this HVN or even get above, come close to this upper range, then we'll be looking for rejection to push back down and come down to fill this gap by testing the lower range of the weekly expected move. Then we'll see would it be able to hold this HVN here near the 462.91 area. And if it's unable to hold this, then we'll be looking at the possibility of coming down, fill this small gap here, and get down to this LVN near the 449 area. And also the other thing is we noticed that the September expected move is up here at 499.06. So the market is not even pricing in for all-time high here. It is below the all-time high. So that's the expectation of the market. The market does not see that the NASDAQ or the tech-heavy sector will play a major role in pushing the market higher. So be very cautious about the upside for the NASDAQ 100. And here, if I put in the balance area based on this swing here, you see this balancing area, we have a 1x extension, and that places it up to the upper range of the September expected move, somewhere around 495. Now I do have a 2x, which is about 500, but I doubt that we're going to see that in September. More likely, we probably see on the downside here, this 1x extension somewhere around 458, and that would be in confluence with this lower range of the September expected move somewhere in the 456 area. So in summary, we are seeing the market participant getting quite complacent right now and showing no fear, and also they are putting risk back on. And in addition to that, we are looking at the market internal is also telling us that there are strengths inside of this broader market, because we are looking at the bond market indexes such as the New York Stock Exchange Composite is continuing to make new high along with the Dow Jones Industrial, and with the advanced decline line making new high in the New York Stock Exchange. That's a message that the market is sending us to tell us to expect the SP 500 to make a new high. So until we see the bond market index, such as the New York Stock Exchange Composite, start deteriorating, the market is nowhere near the top yet right now. and we don't know how high it will go. But until that market index to start coming down and fail to make new high, then that would be the first sign for us to be looking for that market top. So until then, be sure to smash that thumbs up to help promote this video if you like the content. And also, if you are new to this channel, click the subscribe to support this channel. And if you'd like to see more content from me, be sure to go and check out my newsletter at Substack. I have placed the link in the description below, and the link is smtraderca.substack.com. Thank you for watching and good luck on your trading.